What if a new financial order isn't being built in Washington or Wall Street, but in gold vaults across Asia? For the past 3 years, China's quietly become the world's largest buyer of gold, and its actions may redefine what global money looks like next. According to Reuters, July 7, 2025, the People's Bank of China logged its 9th straight month of gold purchases, bringing holdings to approximately 73.96 million ounces, worth about US $244 billion. The World Gold Council confirms that in 2024-25, China and its state banks led official gold demand, part of a multi-year trend of reserve diversification away from US treasuries. Since 2018, China's treasury holdings have fallen by roughly 40%, even while its total FX reserves stay near US $3 trillion. In June 2025, the Shanghai Gold Exchange, SGE, launched Hong Kong delivery contracts and opened an international vault operated by Bank of China, Hong Kong, confirming physical cross-border expansion. Analysts now call this network the Gold Corridor, vaults stretching from Shanghai, Hong Kong, Dubai, Johannesburg, linking BRICS nations and partners. Its purpose is simple: give countries an alternative settlement system outside Western custody. In 2022, Western sanctions froze approximately $300 billion of Russian reserves. That single act proved reserves held in dollars can be blocked. Emerging market central banks began cutting exposure to dollar assets and boosting holdings of neutral reserves, mainly gold. For China, gold is not about nostalgia. It's a strategic hedge against financial weaponization and trust erosion in fiat reserves. Under Basel III's liquidity coverage ratio, Level 1 high-quality liquid assets equals cash, central bank reserves, and certain sovereign bonds. Gold is not yet included. BIS 2024 text. Some policy papers propose allowing allocated gold as partial HQLA, but no formal rule exists. Translation: gold remains a store of value, not a regulatory funding instrument, at least for now. Gold's share of official reserves rose from approximately 10% 2015 to approximately 15% 2025. The dollar's share fell to approximately 58%, the lowest in 25 years. Yet the dollar still anchors most trade settlements and debt issuance. China's playbook seems long-term: build trust, build infrastructure, and quietly give the world a backup system if the dollar falters. In September 2025, Bloomberg reported that China is courting foreign central banks to store gold in its new vault network, giving them custody services similar to Western bullion banks. This would increase China's market influence without announcing any gold-backed yuan. It's influence by custody, not by convertibility. Think of this as monetary insurance. Gold strength equals no issuer, no default risk, universal trust. If more countries trade or borrow using gold-linked assets, global demand for U.S. treasuries could decline, raising U.S. borrowing costs and pushing gold prices higher. Analysts estimate an extra 10% shift in reserves toward gold could create approximately $2 trillion in additional bullion demand. The dollar has survived every rival for a century, but this time, the challenge isn't a currency, it's a commodity. If China's gold strategy succeeds, the next global reserve asset might not be printed. It could be dug from the earth. Would you trust a financial system backed by gold again? Or does digital money feel safer to you? Comment below and subscribe for our next investigation.